Welcome to our video on tackling debt and saving for your first home. Navigating debt can be challenging, especially when you're trying to save for a significant purchase like a home. In this video, we'll provide you with a roadmap to manage debt and save for a home effectively, with the goal of homeownership within the next 18 to 24 months. In today's video, we'll cover several key aspects. We'll start with an introduction to managing debt. Then, we'll move on to strategies for saving for a down payment. After that, we'll discuss important home buying considerations. Finally, we'll wrap up with a conclusion and summary. Managing debt is crucial when you're aiming to buy a house. It involves prioritizing your high-interest debts, potentially consolidating debt, budgeting effectively, and negotiating APR rates. Let's dive into the strategies for managing debt. Firstly, prioritize paying off high-interest debts, especially those with APRs exceeding 15%, such as credit cards. This helps in reducing the amount of interest you pay over time. Secondly, consider consolidating your debt. This can be particularly useful if you manage to secure 0% APR credit cards, as this allows you to save on interest and focus on the principal. Next, you must have a detailed budget that tracks all your income and expenses. This helps in identifying savings opportunities and keeping you on track with your debt repayment and savings goals. Lastly, don't hesitate to negotiate APR with your creditors, as this might lead to more favorable debt conditions. This flowchart represents the steps involved in saving for a down payment. Start by establishing a solid emergency fund covering 3 to 6 months' worth of expenses. It's important to have this safety net before you start saving for a house aggressively. Then, maximize savings through high-yield saving accounts for better interest. Consider exploring additional income opportunities through part-time jobs or gig work to boost savings. Next, identify and cut down non-essential expenses to free more funds for your home savings plan. Finally, develop a realistic savings plan for the down payment, based on your desired home's price range, ideally aiming for a 20% down payment, although that's not always mandatory. Let's pause for a quick quiz. What is the ideal percentage for a home down payment? Here are your options: 10%, 15%, 20%, or 25%. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is 20%. A 20% down payment is often considered ideal because it can help you avoid private mortgage insurance and possibly secure better loan terms. Before you start searching for a house, make sure to obtain a pre-approval for a mortgage. This helps you understand your budget limitations and streamlines the buying process. It's also important to research housing market trends in your target area to stay informed on property values. Lastly, consider consulting with a financial advisor who can assist you with a customized financial plan and offer guidance on both managing your debt and saving towards your home. Buying your first home is a process that requires careful planning and financial discipline. By combining proactive debt management strategies with a consistent saving strategy, you can set yourself on a path to achieving your homeownership goals within your desired time frame. Thank you for joining us today. If you found this video useful, please like, share, and subscribe. We'd love to hear your thoughts and suggestions in the comments below.